we will discuss how to prepare cash flow statement. Just to see the main heads what are coming under cash flow statement. We have already discussed there are three different activities. First is operating activity, investing activity and financing activity. So first we will see the flows from operating activity, then cash flows from investing activity, then cash flows from financing activity. When we add all together, we will get net increase or decrease in cash and cash equivalents. Then from that, we have to add cash and cash equivalents at the beginning so that we will get cash and cash equivalents at the end. That means if you add cash and cash equivalents at the beginning with the net increase or decrease, you have to get cash and cash equivalents at the end. If you are not getting, that means your problem is wrong. Now we can see in the elaborated form, that full complete form of cash flow statement under direct method. Under direct method, as we discussed, first we are taking cash flows from operating activities. And the operating cash receipts include mainly cash sales, cash received from debtors, cash received from in the form of commission, fees, royalties received, that we have to take. Then we have to deduct the operating cash payments. That means cash payment paid to creditors, cash operating expenses. Then we will get the cash generated from operation. That means this inflow minus outflow, we will get cash generated from operation. From that, we have to deduct income tax paid, so that we are getting cash flow before extraordinary items. There we have to adjust the extraordinary items. Extraordinary items means some which is not recurring in nature, maybe loss due to theft, earthquake or other natural calamities. That will come under extraordinary items. That should be separately added or deducted as the case may be. Then finally you are getting net cash flow from operating activity. Now cash flows from investing activity. Investing activity, as we have already discussed, it is related with the fixed assets as well as our investment. So, इधर inflow क्या आएगा? What are the inflows of cash flow from investing activity? That is very important. A sale of fixed asset or investment, any interest received from our investment, any dividend received from our investment, and any profit on sale of investment or asset. From this, we will deduct any amount paid for the purchase of fixed asset or investment, as well as any loss on sale of fixed asset or investment. Then we are getting the net cash from, or net cash used for investing activity. Next is cash flows from financing activity. Financing activity, we already discussed that it is related with the procurement of funds, the various procurement of funds. Normally we are procuring funds from the issue of shares, debentures, bonds and borrowings. So all the proceeds from the issue of shares, it includes the proceeds from the issue of shares, proceeds from the issue of debentures, proceeds from borrowings, and from that we have to deduct redemption of debentures, repayment of borrowings, interest paid and dividend paid, so that we are getting net cash from financing activity or net cash used for financing activity. Then as a final step, we have to add all these flows from operating activity, financing activity as well as investing activity, so that we will get net increase or decrease in cash and cash equivalents. Along with that, we have to add cash and cash equivalents at the beginning, so that we are getting cash and cash equivalents at the end. As discussed already, the cash and cash equivalents at the end should be matched with the cash and closing cash and cash equivalents of our financial statements. Okay. Now we can see how to prepare cash flow statement under indirect method. Indirect method, there is change only in cash flow from operating activity. Other cash flow from investing activity as well as cash flow from financing activity are same as the direct method. There is no indirect or direct method in financing activity and investing activity. But for operating activity, there is separate treatment for indirect method. See how to calculate the flow from operating activity. First, you have to take the net profit or loss before tax and extraordinary items from your profit and loss account. So from profit and loss account, whatever net profit, there you have to make sufficient adjustment for dividend, extraordinary item and tax, and you have to make net profit or loss before tax and extraordinary items. Once you have taken this here, you got to add all non-cash expenses like depreciation, amortization of goodwill, etc. You know they are non-cash items that should be added. In the same way, any non-operating expenses included in the profit and loss account should be added, like interest, any interest paid, okay, any profit on sale of, any loss on sale of fixed asset or investment, all these should be added. From that, you have to deduct the non-operating incomes, like profit on sale of investment or assets, like that. Then you are getting operating profit before working capital changes. With this, we have to make sufficient adjustment for working capital changes. So here we have to add the increase in current liabilities. You have to show it individually. Say for example, suppose creditors is increased, that you have to show increase in creditors. Increase in bills payable, that you have to show separately. So like that, individually you have to show the various items of increase in current liabilities. Then decrease in current assets also you have to add. That also you have to do individually. Then minus increase in current assets and decrease in current liabilities, so that you are getting cash flows from operating activities before tax and extraordinary items. From that, you have to deduct income tax paid. You have to deduct income tax paid and make sufficient adjustments for extraordinary items. That means extraordinary income should be added and expenses or loss should be deducted, so that finally you are getting net cash from operating activity. Clear? Okay. Then this under indirect method also, as I have already told you, cash from investing activity as well as cash from financing activity are same as direct method, because for them there is no direct and indirect method. There are only one method, that you can see one more: sale of fixed asset or investment, interest received, dividend received, profit on sale of fixed asset or investment. Then from that we have to deduct purchase of fixed asset or investment and loss on sale of fixed asset or investment. Then you are getting net cash from investing activity or net cash used for investing activity. Then cash flow from financing activity, it includes proceeds from issue of shares, proceeds from debentures, proceeds from borrowings, and we have to deduct redemption of shares and debentures, repayment of borrowings, interest paid and dividend paid. Then you are getting net cash from financing activity or net cash used for financing activity. Then if you add all these three, that means cash flows from operating activity, cash flows from investing activity, and cash flows from financing activity, we are getting the net increase or decrease in cash and cash equivalents. With that, we have to add cash and cash equivalents at the beginning, as we have already discussed. Then finally you are getting cash and cash equivalents at the end, and this cash and cash equivalents at the end should be matched with your cash and cash equivalents at the end in the financial statements. Okay.